This is Craig Haugard with your Financial Issues Ag Update for November 19th. Well, corn traded both sides yesterday before closing lower for the session. The weekly export numbers came in at 35.6 million bushels, which was at the bottom end of trade expectations. Now, total export commitments for the year are currently down 6% from last year's numbers. In South America, the weather has been ideal lately, but there are still fears that La Nina could wreak havoc on crops in southern Brazil and Argentina. At the close, the December futures were 2.25 cents lower as they settled at $5.73 per bushel. After posting 4-month highs, soybean meal pulled back and took soybeans down with them. The weekly export sales were very solid at 50.8 million bushels, with China purchasing over half of this week's total. For the year, however, soybean export commitments are running 32% below last year. In South America, Argentina's planting progress is right on the historical average pace, with 29% of that crop now planted. Forecasts have been less than 10% of Argentina's soybean belt receiving material rains in the next 10 days. While in Brazil, their forecast shows material rains for 90% of that nation's soybean belt over the next 10 days. At the close, the January soybean futures were 11.75 cents lower as they finished at $12.6525. Wheat started the day on a strong note as both Chicago and Kansas City futures made new life-of-contract highs in the December futures month. Unfortunately, that was short-lived as a round of selling took the wheat complex lower for the day. It's been interesting to see the spread between the U.S. and Russian wheat coming together, as we're now trading at just a $10 per metric ton premium to Russia. While we are not the cheapest wheat in the world, we did have a solid week of export sales, coming in at 14.7 million bushels. At the close, Minneapolis December futures were 10.25 cents lower, closing at $10.1675 per bushel. Kansas City dropped by 6.75 cents to close at $8.2725, and Chicago futures were 2.25 lower, ending the day at $8.20 a bushel. Cotton futures were softer as well. At the close, we had March futures down 178 points, settling at 115.14. Livestock futures were all stronger during yesterday's session. February live cattle were up 85 cents, closing at $137.25 per hundredweight. January feeder cattle rose by $2.45, settling at $161.37.5 per hundred. In February, lean hog futures were a bit stronger as well. They were up 15 cents for the day, ending the session at $83.30 per hundred. Class 3 milk futures reversed their recent trend and had a very strong session. The rally was driven by the October milk production report, which was released during yesterday's trade. The biggest shock in the report was cow numbers. The previous month's initial estimate was revised lower by 8,000 head, and cow numbers fell by another 14,000 head in this month's report. It's a near-record reduction in herd size over the last 5 months. In fact, we're down 107,000 cows in the last 5-month time period. And the only time that we've seen a loss of magnitude in the last 23 years was back in late 2009 when we reduced the herd by 178,000 head over a 5-month period. At the close, we had December futures 33 points higher, settling at 17.48. Meat cutout values were mixed. Choice box beef ended the day $2.31 lower, closing at $276.16. Select boxes dropped by 90 cents to end the day at $263.16. Pork carcass cutout values made a very strong move higher. They're up $5.17, ending the day at $89.69 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.